At the end of every day, look at yourself in the mirror and ask, did I get better today? Monday, get better. Tuesday, get better. Wednesday, get better. If you do that for 5 years, 10 years, 15 years, how much better will you be? Are you getting better every single day? That's the real question. And it all comes down to taking small steps. You don't have to accomplish everything in one day or even 1 week. Just focus on getting a little better every single day.
And welcome back to another episode of Real Estate AF, where the AF stands for And Finance. And I'm your host, Mark Jones, and we are powered by LoanBot, smarter mortgage matching, available on the App Store and Google Play. And recently we've had some pretty good discussions as we're leading into the first month of 2026. And I wanted to bring on a guest that he's got his own podcast. He's got his own production team. He's doing his thing, but I haven't caught up with him in quite some time. So we're going to talk a lot about him. And we're also going to bring up a couple of current topics, current events that we've got some hot takes on. So without further ado, let me introduce Bradley Burns.
Hey, how's it going?
What's going on, Brad?
Not much. It's been a while.
It has been quite a while. Man, when did you get into the business? 2012? 2013?
No, this is year 9. So
Okay.
2016,
2016?
2015. I
Okay.
got licensed like December 30th.
I remember
So I
when you
always get
first got
confused.
in. I remember middle of the career, doing a lot of lead by. Your team was phenomenal at cold calling that concept. But the folks out there, this being the first time on this show, if you could tell us a little bit about yourself.
Yeah, so I'm just a kid from the east side of San Antonio. Grew up, I started working at McDonald's when I was 16.
Okay.
Worked from the fries all the way up to GM. Went to Chicago to Hamburger University. So
What?
I have a bachelor's in hamburgerology. Got to the top of the franchise that I was at. They had 3 or 4 stores, and there was really nowhere to grow from there.
Mhm.
So once I got to GM spot, I was like, all right, like, let me start looking. And the GM that was there before me that I took his spot was Anthony White, and he had hopped into real estate.
Okay.
And I was like, man, if Anthony could do that, I could do that. And
I like that.
so I was in the GM seat for about a year. I did my real estate classes at work.
Yeah.
Jumped in and didn't look back.
Now, you mentioned something, this is totally unreal estate related, but you working there, were you around the time that, no, Super Size Me came out way
Yeah, that was way
right?
before. Yeah.
Okay. How much of that stuff is true? I mean, you got to see behind the scenes, all of it, you know?
I mean, everything. So they always talk about like the quality of the food. From what I saw, they source the food from big companies. So
Sure.
like the chicken is from Tyson.
So
The
they're not
drinks from
cheaping out
Cole.
when it comes to that stuff.
No, I don't. I think it's a decent quality food. I mean,
Yeah.
it's obviously not Ruth Chris, but
Of course.
I think it's a decent quality food. And I think, in my opinion, it has fed a ton of kids that might not have been able to eat otherwise.
I
Especially when
love
like the
that.
dollar
Yeah.
menu was there.
Yeah. What happened to that? Wow.
Inflation, man.
Exactly.
When
And
I
that's-
started there, a medium fry was $1. Now they're like $5.
Yeah, for the fry only.
Yeah.
You're right. Yeah, man. So, okay. So first starting off, what was it like making that transition into real estate?
So it was a big leap of faith. So whenever I jumped over, I put in my 2 weeks notice. Like I remember the date. It was December 15th.
Okay.
And my real estate test was scheduled for the 20th of December.
So you quit before you even passed the test?
I didn't know that people failed the test.
That's epic. That's epic. That's that one. Okay. Very good.
So put in my 2 weeks notice, took the test, passed it. We were closed on Christmas Day, came back the day after, and they were like, all right, you can go ahead and go, or you can go work at another store. But like, we got your replacement here for this one. And I was like, no, I'm cool. Like, I'll go do Uber for the last week or whatever.
Okay.
And yeah, just jumped into real estate and did whatever it took.
Yeah.
So I see that sign and it's like, people ask you, what do you do? Tell them whatever it takes. And so my thing was like, I was one of the first ones in the office, usually one of the last ones to leave. And I was going to do what it took to make it happen.
Yeah.
Or I was going to have to go back to McDonald's, and that wasn't a choice.
That's right.
So when I originally started off cold calling, and so I got into real estate, like week 1, I found this script for expired listings, and
Okay.
I went on Zillow, and I was like, let me just call some expireds, or not expired. Let me call for sale by owners.
Okay. Bizbos.
And like the way KW was, I started off at KW, and the way it was there, They had like a bullpen area. So I went back there on the computer and pulled up Zillow and started calling. And people were like, where are you booking these appointments? Like, bro, I don't know. I'm reading this piece of paper. And
you guys, not to stop you, but you guys had a pretty good group when you came into the business at that Keller Williams. I remember you guys were shaking and moving. No, you guys weren't on the same team, but it was almost like a conglomeration of different personalities that all jumped into the business that were all very hungry.
Yeah. So we got like in my Ignite class, that's the kind of the training class you go to. So it was Moses Thatcher, Danny Moman, Mary Bradley, Shannon Richardson, I think is her last name now. So there's like a ton of people that are still doing really well in the business. So, I mean, hopped in at the right time. And one of the classes I took, it was on For Sale by Owners. Patrick Hammonds taught it.
There you go. I remember he was doing Ignite and Bold. And
And he was like, man, go to the For Sale by Owner listing and take a seller's disclosure because they might not even know they need one.
Right.
So I was like, cool, I can do that. So I printed out the first page of the seller's disclosure because I thought it was one page. And so I went to the appointments and I left them with the seller's disclosure that was one page, not knowing what was 8.
That's awesome.
But I did what I
gave
had
it
to
to him.
Yeah.
That's right.
But hey, you need this. And I was like, now I look back, like, oh, I gave him part of it. Right? I gave him the taste. Like, here, you need this. And on the other 7 pages, list with me.
That's awesome. That's awesome. So you being thrusted into this, I would imagine, did you enjoy it pretty quickly? Because it was a totally different transition from managing a location with probably high school type folks doing transactional type situation, task oriented things, flipping over to got my big boy pants on now. I'm talking to people about some real stuff.
Well, so like when I jumped in, it was literally whatever I had to do.
Okay.
So I came in, I started circle prospecting, calling for sale by owner. So I would circle prospect, we'd pull a list of neighborhoods. And my goal every day was to talk to 100 people. And before I had money to pay for a dialer, I would come in, have that list printed off. I would start dialing at 8:01. And to talk to 100 people, you have to dial like 800 people.
Oh, yeah.
So manually dialing each one of those. And sometimes it'll take till 6, 7 p.m. But it was either that or I was going back to McDonald's and people would look at me like, oh, like, how do you do this? It's hard.
Yeah.
I was like, no, what's hard was Friday night at McDonald's shorthanded with a bunch of high schoolers that didn't want to be there.
Boom. That's a great point and also a great perspective on the way folks right now in real estate are thinking about how difficult it is. You could be doing something else and not making nearly as much.
Well, I had a conversation with somebody the other day and they're like, man, I'm struggling in real estate. And we looked at their activities and I was like, your activities are struggling. It's not you. And they're like, I don't know if real estate's for me. I was like, cool, let's break out the math. Like, you don't have a college degree. You don't have this. You go get a job. You might make $20 an hour.
Sure.
Let's do the math on that.
Right. Wow.
How many months or how many transactions is it going to take to feed into that?
Well, that brings up a point that Scott Maloof, you know very well. And we were talking the other day, he had drifted off into a new enterprise that he was doing rental properties, et cetera. And it was struggling a little bit. And he spoke to his mentor. I don't remember who he was talking to, but one of his coaches basically said, look, I know you put real estate side on hold to do this other thing, but how many properties do you have under management, et cetera, et cetera? So if you were to sell one house, you would make more than the entire year of you doing this. And it was just like,
see, but I agree upon that though, too. But like when you look at certain things like property management company, because I know Scott has a property management company or did.
That's the one we were talking about.
But if you look at it, like your real estate sales business is not something that can be sold down the road.
No.
Because there's no reoccurring revenue really coming in.
Yeah.
So they talk about like you can sell your database and do those sort of things. But
I've heard of a couple of lenders that have done that. Now, mind you, I've got a massive database. We're talking over 10,000 over the years. I couldn't imagine going, hey, you want to buy my list of people?
Yeah.
Like what?
It's like I can go on Google and pull a list of people.
Yeah.
And, but with the property management is you get that reoccurring revenue.
Yeah.
And that's what can be sold.
Similar to an insurance book of business.
Yep.
Yeah. That makes perfect sense.
So when I look at that and I'm like, okay, well, you can make more on the sales side, but as soon as you stop, it stops.
That's right. That's right.
And that's why I've kind of transitioned. I'm still doing the sales.
Same.
But transitioned to doing a lot more investing in real estate.
Yeah.
Because those things, will continue paying dividends versus stopping when I stop.
That's the residual piece that we as mortgage real estate professionals are supposed to be practicing what we preach to do. But I will tell you, many are not.
It's tough.
I would, well, there's multifacets to the toughness in that, because you've got number one, being diligent with your income. You guys aren't taxed up front. So it's like, okay, let me save for taxes. And if you're not willing to save for taxes that you actually earned on, well, then you're not going to qualify for your traditional financing loan, which now kicks you over to a bank statement, 1099, all the DSCR, all the alternative type programs, which there's nothing wrong with that. Still acquire real estate.
Pay a little bit more for it.
Yeah. But like I said, it's multifaceted, multi-layered in that aspect. So I started early on in doing that, investing in real estate, buying, holding, then we sold them all, then started flipping, etc., which thinking that residual was going to last through the tough times. And it's like, man, built these teams, shrunk these teams, built these. Well, now I'm back producing, going, all right, let's do this way this time. Yeah. If that makes sense.
And going back to like the buy and hold and things like that, the powerfulness of it, it's not just monthly cash flow. It's not just appreciation.
Right.
Like we talked about being taxed, that accelerated depreciation that Trump just brought back.
Yeah.
That's something a lot of agents are missing out on. They're going to go pay $20,000 a year in taxes when they could take that $20,000, move it over, buy a property with it. That's going to increase in value over time.
And these are the things that many don't even educate themselves with. And it's sad to say, but as soon as you mention the word TRUMP, they turn off. And there are multiple things that I think he's trying to do, probably not going about it the best way, but at the same time, it's the first time these types of things have been done. So who are we to say that it's the right or wrong way to go about it? I don't know.
Yeah,
I mean, I run a mortgage, I run a branch, not a country. Yeah. So who am I to say how it should go down? Because go for it.
I was just saying, he's just not as polished. Like I feel like I fall into some of those same things. I get pissed off about something and say what's on my mind. And then like, man, maybe I shouldn't have said that. Like, and the pressure on him versus the pressure on us is so different.
Basically he's kind of human. You know what I mean?
And he's a business person. Like,
very true. Very true. That being said, and before I want to get on some of these topics here, I want to continue down your road. You have recently, let's go back for a moment. You got in the business. Around that time, Boomtown was a big thing. Sync was a big thing. Matter of fact, Sync was a company that Review My Mortgage partnered with back in the day. They're still around, but at that time, they had switched to just lenders. Then they switched back to realtors. Wonder why they did that? I don't know. Probably something to do with CFPB. Who knows?
Yeah.
But you guys had quite a bit of resources that at that time were not crazy expensive just yet. You fast forward to today, if you're trying to buy leads, it's going to get rather costly. Most of the good lead generators or aggregators are taken and exclusive, like your Zillows. You can't just say, oh, let me have that zip code with Zillow anymore.
And they've turned into not a monthly fee, but more of a referral fee type thing.
That's right.
They're making more money.
They became the realtor.
Yeah.
They became the lender and are now able to kick back basically what it is legally.
I'm interested to see what happens with those RICO filings that they put on Zillow.
That's interesting. You know what? Let's talk about that for a moment. Let's see here. Let's see. Let me see if I can. What's going on with the RICO filings against, who is it against?
Zillow
Against Zillow. Wasn't there somebody else? Just them?
I think it was mostly them.
Okay.
You don't have to spell things correctly to put it into AI.
I don't spell things correctly anyway.
I don't either, because sometimes I spell so bad that spell check doesn't even know what I'm trying to say. So I have to use talk to text in order for it to...
That's a true fact. Guys, gals out there, if you know me well, you know I don't spell well. But it has never stopped me from getting to where I am today. I'll tell you that much. Okay, here's a clear up-to-date picture of what's going on with the RICO. Court merged 2 class action lawsuits against Zillow. Plaintiff. Okay, let's see here. Have filed federal class action lawsuits against Zillow and several associated parties alleging that Zillow's business practices in its real estate and mortgage units violate the federal law, including RICO. Dang, that's just nuts to lump them together.
Real estate with the mob, right?
Like, plaintiffs claim that Zillow operated an organized scheme to funnel business and make money at customers' expense. Yikes. That's oof.
So what they were saying was, so a lot of these big Zillow Flex teams,
right?
They were having a Zillow representative come down and meet with them and tell them, hey, you need to send your business to Zillow Home Loans or we're not going to give you as many opportunities.
Wow.
And they wouldn't put that in an email in writing because they didn't want to be tied to RESPA stuff.
Yeah.
So they actually came down and visited teams personally is what I heard.
Oh, and had secret shoppers.
Yeah.
Ooh, how stupid. But at the same time, I want to give another perspective on this. And it's not an alternative perspective. It's just zooming out a little bit. How much is Zillow worth today? And how much do they make annually on average in lead gen revenue? Bink.
I guarantee they make more money on the mortgage side.
Nope.
You don't think so?
Oh, I know so.
Really?
Oh, yeah. Dude, I'll explain this to you guys here in just a moment. Let's see here. Amy, try that new view to where it's like right here. No. I'm saying like the little, is it right there? What we're looking at? Yeah. Sweet. Okay. So what we're looking at is like right here.
Okay.
Yeah. The second reference. There you go. Boom. Okay, so Zillow Group, its public traded company, as of mid-January 2026, Zillow market cap is roughly $16.3 billion. It's represented in total stock, yada, 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 $66 to $68 per share. Market cap. Okay, we can keep going. All right, Zillow's annual revenue, $2.2 billion in total revenue. Now, let's see here, based on the quarterly Zillow monthly revenue through quarter 3 was about 2.4 billion, suggested continued mid. Okay, how much do they make from lead generation? So of the 2.2 billion, 1.5 billion comes from lead generation directly. That's huge. There we go. Broke it down for me. So, I mean, more than half of the revenue comes directly from lead generation, and they've got a mortgage company and they've got a real estate investment and their money. And the reason why, I'll be honest, the reason why we started Review My Mortgage back in the day is because at a certain point, when you are large enough as a data aggregator online, you're now not only a lead gen company, but you're also an information company.
Yep.
Then parlay that to people are paying. They're taking your money, spending it on certain locations to advertise. Well, Zillow started like in 2002, maybe. It took them 8-10 years for it to become, oh, you know who Zillow is? Yeah, I'm using Zillow. Then another 3 years to become a true household name. You can't say Zillow and somebody goes, huh? What's that?
Yeah.
It just doesn't happen. So as that happens and increases, you now jump into the osmosis effect to where you're giving $1,000 for leads, but it only costs them like $40 to get that same amount of leads. Why? Because it's a household name. Yep. Everybody's going there without the ads that they had to use to direct people. If that makes sense.
It does.
So now you went initial margin of lead generation. Typically you've got like a 5% markup. Then next month, 10% markup. Keeps going. Now all of a sudden you've got 90% markup on these leads, and that's all profit, baby.
So I've heard from some people that were in some rooms.
You can throw the reference away.
That their plan is with these flex teams, they know who's closing.
Okay.
They know what agents are closing.
That's right.
Because they listen to
Scoreboard don't lie.
Yep. So they listen to the phone calls. So I've heard their plan is to get rid of the team leader and tell these agents, hey, come work for us directly.
Ooh.
50% split.
I mean, if that's where their deals are coming from anyway.
And then they get a raise because they get rid of the team leader.
They got from underneath the overhead that was created to help them.
Yep.
Man, that means I need to get Levi on here soon. Ooh.
I've heard that was the plan they were going down. Now we'll see if it's true or how long it takes. But
wow, that's interesting.
Yeah.
That's very interesting, very fascinating to think about on a large scale about how big Zillow is, how against realtors or how much realtors are against Zillow in the public, but behind the scenes, everybody's trying to buy leads from them.
Yeah.
If you could buy them cheap, you would.
If you told me, hey, here's these leads, I'm gonna give me a 40% referral fee.
Sounds
ready
great.
to go. Cool. Like, let's do as many as we can.
That's right.
Because I'll pay an agent that gives us a referral fee. I'll pay them 30-40%.
Exactly. Like, what's wrong with that?
Yeah, there's nothing wrong. Whoever sources the lead should get paid for that.
I totally agree. That's kind of how origination works on our side. The reason why the originator makes the bulk of the funds in that margin, so to speak, versus the operations team or anybody else, it's hard to capture a deal.
Yeah.
The origination portion of that piece, you know? Anywho, okay, that was a cool rabbit hole. Very interesting on that topic. So what are you doing these days, man? I know you got the podcast. Tell me a little bit about that. And then we'll flip back over to your production and what you're doing to stay ahead of everything in 23, 24.
Yeah. So these days we're doing a lot of investing. We're doing flips, picking up some buy and holds, things like that. And using that as like our superpower to attract everything else.
Okay.
So most of my content has switched over to talking about investments, talking about the flips, doing those walkthroughs, doing that stuff. And just using that as the lead magnet for people that do want to learn how to invest, agents that want to learn how to invest and everything like that. Yeah. I think now is the time for agents to become owners in things. So it's not just owning real estate. It's not just owning the different parts of real estate.
Right.
Owning houses. Are you part owner in your brokerage? Are you JVing with the title company?
Smart. You're right. Think about the future for a moment.
Yeah.
So the fact that you're switching into that, or not necessarily switch, you're adding to what you already do. You're not switching your focus, so to speak. You're still helping people in homes, but the buy side of it, can you take me down the road of what you as the realtor kind of stems from what I was talking about earlier with the alternative financing routes, things like that. What are you using to purchase them? Are you saved up enough? You're just cashing them out?
We're majority of this stuff
I would
private money.
Note, I would not recommend that, guys. If you saved up enough cash, don't just go and start buying properties. Leverage the hell out of it.
For sure. Yeah. So literally 99% of the money we use is private money that we borrow from friends, families, colleagues, whoever has it. If they have an old 401k, they can move it into a self-directed 401k or IRA.
Yep. And
lend it out to us. We're paying double digits, 10, 12% on the money short term.
Talk about that for a moment, because that's a new, I had never heard of that. Go for it.
Haven't heard of what?
The 401k, leveraging it, that kind of stuff.
Yeah, so if you have an old 401k, it can't be for the company you're working with now.
Right. So typically they would do like what is that? 35 exchange,
they transfer it over. I don't know the name of it. Yeah.
Correct. I used to do that stuff.
So they
another life.
Transfer it over to a self-directed 401k or self-directed IRA. And they're able to pull out of there instead of investing it in the stock market.
Right.
They can pull out of there and then lend it to us.
So that doesn't trigger a taxable event?
No, because it gets paid back into their 401k.
That's something that a lot of people don't know about.
Yeah.
At all.
If you're going to put it in something like that and you're making 3 to 5% a year and you can lend it to us and make 10 to 12%
in that year.
Yeah.
Correct.
It just compounds and everybody makes money from it.
Absolutely. That's a very genius way of going about it, especially if you're able to work with somebody that has a reputation of coming through.
Yeah. Don't go lend it to your cousin that just got their real estate license.
Correct.
But I mean, I have other agents that do amazing in real estate that don't want to have to deal with flipping the property, don't want to have to deal with this stuff, but want to make money on their money.
Right.
So I have other agents that'll lend us money for deals.
That makes sense. That makes sense because they left whatever industry to come and do real estate, and that money's just sitting there.
Yep.
You don't want to pull it out to go and buy a property because you then create a taxable event. Your 100% now just turned into 40%. That may turn into 50% after everything's said and done, versus lending it out, allowing someone. And then is there a time frame that you got to put that back to it?
We usually do 12 months term, but we try to get it back in 4 to 6.
Okay, that makes perfect sense. So they are then pulling a loan from theirs at a super, super low interest rate. You guys are definitely making more than that.
Yep.
Wow. I had never heard of that before today.
So we're doing a lot of that to where we're putting other people's money to work. And I mean, it's just helping everybody. But not a financial advisor.
No, me neither.
But just disclaimer.
On every episode before it starts, it says that very clear.
So what they're
this
able
is
to
just
do,
our opinions, guys.
Yeah. So it's the same thing. So it doesn't create the taxable event because they're able to direct it to lend out instead of putting it in the stock market. So when you go choose your stocks that you're going to be investing in, instead of doing that, saying, hey, I'm going to lend it to Mark.
Makes perfect sense.
10% interest.
He is the institution because it's typically an LLC that has to be loaned to. Similar to working with hard money or anything like that, it becomes the instrument that you're using to
that's
invest.
what a lot of hard money companies do.
For sure.
Is they find private investors that got a bunch of cash.
Yep.
They'll pay them 10%. They'll collect 12%. And if there's any interest points up front, 2 to 4 interest points, that's where they're making their money on it at.
That's right. The origination up front. That's exactly correct. I've had Jade on here many times and we talk about that concept and why so many people are scared of hard money. Well, it's not that they're scared of hard money, but they don't have the plan on how to make it back.
Yeah. Well, you just have to budget it in.
Right.
So I had a conversation with somebody yesterday, an agent from Houston called me that I know. And he said, hey, I have this friend. He just won a foreclosure house on some website and he wants to flip it. Can you talk to him? So he called him up. I was like, hey, what's the address? Like, what's the price? And it was in Alamo Ranch.
Okay.
And he had won it for $240.
Wow.
And
whatever in Alamo Ranch.
Like $350.
Okay.
And so I said, okay, well, we don't know what the inside looks like because you have to evict the person that's in there because there's somebody in there.
Mm-hmm.
And so looking at it, I plugged it into the calculator I had and I said, okay, in a perfect world, you buy it for $247, I think it was. You put 40 into it. It sells for $350. Let's say $340 because there's a lot of new construction. So I think we did $340. So you're going to make $11,000. It's not worth it.
No.
Do not buy this house.
That's right.
And so that's one of the things
that's great advice.
As an agent, I pride myself on is I tell my buyers all the time, I'm going to tell you not to buy more houses than the ones I tell you to buy.
That's great advice in itself. In addition to setting proper expectations, if that makes sense, because being in the flipping game myself, you're right. Unless you're planning on flipping 10 properties that year, which most of us, that's a tough feat.
Yep.
$11,000 is not worth it.
Even if you're doing that many, $11,000 isn't worth it because one mistake,
that's what I was going to get into.
You need a roof, you need whatever, it's gone.
Just like that. And now one more mistake, you're upside down.
Yep.
Now, mind you, I do and have mentioned this many times before that you look at comparing flipping real estate to, let's say, a college degree. It cost many people hundreds of thousands of dollars to get that piece of paper. They get out, they have no clue what they're doing. Hard to find a job. Even if you do find a job, it's probably not going to pay you enough to recoup how much you spent over the last 4, 5, 6 years, however long it took you.
Yeah. You need 10, 15 years in that field to make up for it.
Yeah. Whereas on the flipping side of things, you've got, let's say, the situation where you lose 20 grand. Well, did you learn something? I hope so. Because if so, that was probably a pretty cheap lesson comparing to college.
But losing that 20 grand hurts a whole lot. That hurts a whole lot more versus paying for college because your college is probably on a loan that you're not paying anyways.
And you can defer it anytime and you might get a president to just let it go. Anywho, who knows? So on the investment front, how is that going? How are you guys? Are you liking it? Are you wanting to move forward with it?
Yeah, for sure. Okay. So we're picking up as many properties as long as the numbers work as fast as we can. So we have a pretty strict buy box. We're not buying stuff that we're personally doing. Like we'll wholesale some stuff out.
Sure.
But we're not buying stuff to personally do that's too old. So if it's older than 1980,
Yep.
I really don't want to mess with it because it's usually aluminum wiring and things
Sure.
like that. Bad foundation, I usually don't want to mess with that because then you got to do plumbing and all that extra
Absolutely.
stuff. So ideally, I like stuff that is pretty clean.
Yeah.
And the best lead source I've found for that is just lead generating for traditional real estate.
Yeah. Good
And
point.
opportunities come up.
That's right. That's right. Matter of fact, every single one of the properties that we flipped was a friend of a friend that told a friend or something like that.
Yeah.
That none of them were on the market. It was just, there's a situation, they need the money. There's a situation, they need the money. Okay.
And people look like, oh, you're the investor. You're taking advantage of people. You're the bad guy. No, you're solving a problem.
Absolutely. And if you don't, someone else
Yeah.
will.
Because if they could put it on the market and sell it, they probably would.
Absolutely. And the amount of kudos that we got from, matter of fact, even one of the properties that we flipped, we chopped up the proceeds with the person that we bought it from. We said, look, we honestly don't know how much this is going to sell for. We did a good job on the flip, on the renovations. They were in tears going, this is, I never could imagine my house like this.
Yeah.
Well, first off, it's not your house anymore. So no, secondly, we chopped it up with them because they took the risk on us, if that makes sense.
No, for sure. And
We didn't want to take advantage.
that's a great strategy as well. Like,
Mhm.
and I've noticed a lot more like on the investment strategy, there's more and more strategies coming out. So you got people doing what's called a novation, where they're basically partnering up with the seller, paying them a little bit more than if they had to go buy it and maybe
Okay.
fix it up a little bit, then list it and sell it.
Novation. I
Yeah.
like that. I never heard of that.
And so
Keep going.
Yeah,
This is good.
It'll be basically they'll put it on a contract and say, "Hey, Mark, I'm gonna give you $200,000 for your house." Cool, I really like that. That's a good number. It's more than the flipper said they'll pay. You might put paint and carpet. You don't do super high, and then you list it maybe 95% of what it really would be worth.
Okay.
So it sells quick.
Yeah.
And in that route, the title never transfers, so you can automatically sell it FHA.
Yeah.
You don't have to wait on the 90-day flip.
That's
rule,
right.
things like
It
that.
wasn't an actual change of hand. They just partnered up to get it sold.
Yeah,
Essentially like partnering with a realtor that's got a little extra cash.
yeah.
Right. Pretty cool concept. That is something that we had considered a while back. Just couldn't find the right folks. You know, my wife is a realtor.
Yep.
So it just wasn't right. But that I'm sure there's tons of opportunities just like that, especially when you've got a team that's doing all these calls and talking to these people, building these relationships out of a conversation.
And that's what I tell our team is the hardest part in real estate is finding a client.
Mhm.
Hey, you got a buyer.
That's right.
Go find us some deals.
That's right. Wow. Good point. Good perspective on that too. It is that simple. I am the buyer. Go
Yeah.
find me what I'm looking for. And you find it, I'm gonna buy it.
Yeah. We'll find the money for it. I might not have the money, but we'll find it.
That's right. I love that, man. Wow. Okay. So now we talked about the investment side of things. Is there anything else you want to mention on that?
No, if you have any deals, shoot them our way.
I
We're
love that.
buying.
Okay, good. How are things going for you on each person that I've brought on in the last, 10 episodes, we talked about 22, 23, 24.
Yep.
25, I feel like things picked up a little bit, nowhere near what we are used to. 26, I'm optimistic, but I'm always optimistic.
For sure.
It's hard for me to not be optimistic. We've got some things like, for example, matter of fact, let's talk about your part first, and then I'm going to throw up what two things I feel that the current administration just recently announced. We can talk about that a little bit to see positive, negatives, how that's going to affect things.
Yeah. So 2024, definitely production went down. I mean, everybody's did for the most part.
Everyone.
25, we beat 24 by a handful of transactions.
Okay.
26, excited to roll in. I feel like we're in a good starting spot. I don't know. I think it's still a little too early to tell if it's just because it's the beginning of the year
Good point.
or if it's actually changes happening.
Meaning the sentiment piece, or because a lot of the things that we do in real estate are very transparent these days. You can see what home values are doing. You can Google what rates are, that kind of stuff. So is it more so the sentiment of buyers, or?
So when I'm looking at it, I look at when I want to gauge on how the market's doing, I'm looking at showings
Okay.
on our listing.
Okay.
And so like after the first of the year, I had a conversation with some investor clients that have a house listed, and they're like, it was like December 26th, and they're like, let's drop the price $15,000.
Mm-hmm.
I was like, hold on. Like, let's wait till January 5th. That's when the market always picks up, that first week in January.
Yeah.
And we went under contract that week, and we didn't have to do that price drop. So sometimes people get a little itchy, and they want to over jump it. But I always say like that first week in January, it always picks up. So I'm interested to see if the pickup in showings had to do with interest rates coming down, or if it's just because it's that time of the year.
Okay. That and only time. Well, I guess.
And that's what I can see. I can see the amount of showings. Now, like you can see the amount of applications.
Correct. That's what we follow is the amount of applications. And then you can kind of look at it and say, okay, is the amount of applications equal to what it normally is this time of year, or is it higher? And kind of see where the market's trending that way. Yeah, good point. That and unfortunately, we don't get to have that data until after the month is already done. Yeah. So we couldn't tell you what's going on in January. We could probably in December, but at the same time, December's slow for everyone. We're Christmas, we're Thanksgiving, all of the things, doing a lot of business planning, that kind of stuff. Hopefully your year planned out. If it doesn't, then you better be hitting the phones and saying, Merry Christmas. Would you like to buy a house?
That week before Christmas, in between Christmas and New Year.
That's right. As a matter of fact, I used to, 2012 through probably 2018, 2019, we were the team that would go and pick up all the rest of the agents that were being neglected by other lenders during the Christmas time, because deals still have to happen.
Yeah.
You know, we were willing to work. And then as we progressed, it was like, okay, we'll join the crew. But now we're kind of getting back to that concept of relentless. Gloves are off.
I mean, that happens on our side too. Like I signed up a new buyer yesterday that they were like, yeah, we're pre-approved with Veterans United. And they said they were going to give us a realtor. And it's been 2 weeks. We haven't heard anything.
Wow. They dropped the ball like that?
But they do it consistently.
Wow. Okay, so let me ask you, because you bring up a good point. I was talking to Andy Hilger. He owns Lofty Hilger Group. And he was mentioning, him and Russell Diley were talking about Veterans United. They were talking about, there was one other that gives them referrals. They take 40% of the commission. That's nuts to me that they would not get back to them. But then at the same time, do you as the realtor taking that deal, even though it wasn't referred to you by them, still have to give that 40%? Nope. Okay. That's what I wanted to make sure of.
No, unless they refer it to you, then you have to give it.
Okay.
But no, you don't. But it happens so often. It's not even just on low hanging fruit or layup lead sources.
Sure.
That's when agents drop the ball. Like I can't even count how many people have worked with us that has really good friends that are agents.
Yeah.
Like one family in particular, they're like, their kids called that guy uncle. And they're like, hey, we want to buy and sell. And he never really gave them that attention.
Wow.
And they found us on Sync.
Okay.
And we helped them buy and sell. And
wow.
And that's just one in particular. But any low hanging one, if you don't have to work for it too hard, you don't appreciate it.
That's very true. That's very true. Or you had a big wave. I don't remember the years, probably, anything prior to, let's say, 2022, realtors weren't even doing listings for rental properties. I'm not going to show you a rental. I don't have time for that. I'm going to send it over to my such and such assistant. Now they're taking them.
What? Yeah. I had this conversation with somebody the other day that will go spend an hour cutting somebody's yard to make $50, or they'll go show properties for another agent to make $50.
Yep.
But they won't show a rental that might show 2 houses to make a few $100.
Correct. Weird.
Ego.
Or in all of that, take an hour of that time and bang it out on the phones to capture one client that would then turn into a closing that turns into more dollars in addition to referrals if you do it right.
But I see that too. But I understand the other part because it's guaranteed money.
Correct. Totally.
And
you
do what you got to do.
In addition to that, not only the guaranteed money concept, but the right now of it. The betting on yourself in many mindsets has been very difficult because I bet on myself, but I'm not getting anything right now.
But I think one of the things a lot of the higher producing people have is, And I don't know about you, but like for me, I usually don't think about what happens if this doesn't work.
I don't. I have a plan for it. I've always got a plan A, B, and C, like for borrowers in particular.
Yeah.
And I go over those plans in our initial, once we got the contract. If this doesn't work, then we're going to do this, this, and this. Is that okay with you?
Yeah.
Yes, that's my backup. Great. And the reason why I bring that up right now is I think I've successfully mentioned this on every episode thus far. The folks buying right now are the ones that could not buy in 2020, 2021, 2022. It's just true. Or else they too would have a 3% interest rate.
Yeah.
You know,
I saw a post the other day from one of my buddies in California. He has a big team and he probably has 2,000 doors in this property management company. And he was like, a lot of people think they're smart by holding on to this 3% rate. And like he did the math on it. He was like, if they hold on to this house that they have at a 3% rate, by the time they rent it out for this amount, this is what their payment is. They're losing like $2,200 a month. But they're smart for holding on to the rate instead of selling and cashing out $400K in equity.
Right.
They're going to lose $2,200 a month.
Yeah.
To say they're a landlord.
That can be parlayed a couple of different ways because that is almost the same concept of what we're seeing on social media. I'd rather look this way versus actually being who I am or showing what is actually happening at the cost of possibly going without.
Yeah.
And
I think everybody where they're at now, especially if they're a higher producer, like they went through without for a long time.
For sure. There's no doubt. In addition to the fact that, and I would imagine you probably did the same thing back in 2016 when you started, was shadowing someone else to learn as much as you can without getting paid for it.
Oh, for sure.
You know what I mean?
Anything you could. Like, I still want to learn anything I can. So I'm
Me too.
helping out, doing whatever I can to whoever and just looking for value to provide to people. And it's going to come back around.
Yeah, it's true. It is true. Okay, so let's get into this piece. Amy, where are we sitting on time? It should say right around. Okay, good deal. We've got probably another 15 minutes or so, guys and gals. But for the end, we're going to tease you with a little bit of what's going on. Let's see if I can have chat give it to me. Can you provide me with 2 links to articles? Articles regarding, I'm going to do the first one is the 200B from Fannie and Freddie. The second is going to be the, what was he call restriction
on institutional buyers.
On institutional, institutional buyers. Bang. And then I'll throw these up. I was going to play a video. I don't know if anybody out there watches Graham on YouTube, but he put a video out and his teasers are always complete opposite of what his perspective is to get people to watch.
Clickbait.
Yeah, that's exactly right. So I clicked on one this morning. And I was like, what the hell, man? I thought you were going to give me something different.
Sidetrack while you do this. One of the things I've started recently doing, using that Gemini in the top corner. So I'll go to somebody's Instagram account that's absolutely crushing it.
Okay.
And I'll say, hey, based on this Instagram account, help me come up with a content plan on how I can do this.
Boom.
And it'll pull it out. Hey, these are the best things they use. These are the hooks. This is how they do it. All that.
You would be so blown away at how I use ChatGPT. I've been using it since day one. We used it to help build LoanBot. We used it. There's some things that are currently happening with ChatGPT that are on automation that are right now going. Data, statistics, building websites, building landing pages, grabbing, scraping, creating blog posts, putting those on the website, automation.
Yeah.
Parlay that with Zapier, guys. And also, I will be coming out with a leverage technology to win class for realtors, showing you how to use Canva, ChatGPT, LoanBot, Zapier, all these things to put into your business that you can essentially automate to give yourself more time. Giving yourself more time allows you to go and make more sales, shake more hands, kiss more babies, all that good stuff. Anywho, okay, so this first one, we've got Trump says he wants government to buy $200 billion in mortgage bonds in a push to bring down mortgage rates. I'm not going to go into the article, just the headline. John Hudson and I will be having a conversation about this in depth next week, but I want to get your thoughts on this. I know you're not a financial advisor, and perception is, okay, that's going to make rates go down. What are your thoughts on it?
I think it's more than perception. I think just the rumor of it or the hint of it dropped rates under 6% for the first time in a few years.
Yeah.
But it's just interesting to see, as business people, we solve problems.
Yes, sir. Yeah.
And if we can't find one way to solve a problem, we'll find another way.
Love that.
And I feel like that's what the president did with this, was the Fed's not dropping the rates like I'm keep pushing them to do, asking them to do.
Correct.
Let's find another way to make that happen without having to have them do it.
Like you said, finding a way that doesn't disrupt this and still gives the people what they want, or what they need, I should say, which is the lower rates. What scares me about this is rates dropping too low too fast, which then causes inflation, which this shouldn't be an inflationary thing because it's coming in way of the Fannie and Freddie, not the Fed.
It's not new money printed.
It's not new money printed. That's exactly right. You get that concept. And it will take, matter of fact, here's a nugget of gold for everyone. If you're looking to lower your rate, this doesn't mean don't buy until this point, but if you're looking to lower your rate, watch what rates do probably around the second week of February, second week of February. I have a feeling that this announcement, and just like you said, just the announcement of it breeds this sentiment, this motivation that then creates people buying those types of securities, et cetera. And I think Donald Trump has a good grasp on how the market works. It's speculation. You create a little something, this is going to happen.
Yeah.
Kind of like the insider trading concept that Nancy Pelosi and them have been doing it. Well, Trump went, hey, everybody, you should probably buy right now.
Same thing Elon did with Doge.
There you go. Yes, sir.
Not the entity, but the coin.
No, but the coin. Yeah.
And I think, like, looking at it, I thought he was crazy when he was like, well, I'm going to ban institutional buyers.
Yep.
But pairing that with this to bring down rates.
Yeah.
So this announcement brought down rates.
Yes.
When they announced the Fed, the new Fed,
Yep.
that's going to bring down rates.
Yep. Sentiment. In addition, and this is kind of this is the prelude to the next week discussion, but let's talk about the institutional buyer part before we go. Okay. Let's see here if it gave me one restriction. Boom. There we go. All right, Amy, let me know if you got that up on the screen. Boom. Let's go here. Okay. So the headline is Trump says he will seek to ban institutional investors from buying single family homes. And like I said, I'm not going to read the rest of it, but just that in itself is creating that urgency to lower the rates. Why? Or in addition, the sentiment for the buyers thinking, okay, there's going to be more homes, whether there is or isn't. And the reason why I say is or isn't is because, and we've mentioned this on here before, guys, institutional buyers only make up less than 1% of the investment properties owned in all of the United States. There are plenty of saturated locations like Georgia, for example. There are quite a bit of saturations in there to where institutionals buy neighborhoods or something along those lines. But for the most part, mom and pops own most of the investment properties.
So when I hear
your people like Brad Burns own most of the investment properties.
So when I hear people talk about and complain about these institutions building neighborhoods to rent, I ask them this question. What's the difference between that and an apartment complex?
Nothing. Zero.
They have a yard.
Matter of fact, what's different is that comes with a bigger risk than someone building an apartment. So it's like, hats off to that institution for doing the Lord's work. No, I'm kidding. But there's another facet to this is if you are halting the buying of the void of them buying, what does that mean for properties? The values are going to either go up or down based on that absence of them being into the market.
So I think my opinion of it, and I kind of came up with this today.
Go for it.
Over here.
Yeah.
So I think Trump announced banning the institutional buyers before he did this to lower rates.
Right.
So that way, if the market takes off like it did during COVID, you don't have 1,000 different iBuyers popping up that buys the property, paints it, and just throws it back up on the market.
That's pretty smart. That's a pretty smart perspective. Matter of fact, I didn't think about that until just now. Can you break that down for the folks?
Yeah.
Because
so
I think you're on the money, actually.
There were companies like Open Doors, Zillow was doing it, a bunch of different ones. They would come in, buy the property they would buy it higher than a regular cash buyer could buy it. So they would buy it. Sometimes they would overpay, but I mean, they would buy it at 80 to 90% of the value.
Yeah.
And then paint it and throw it back up on the market and then make money that way.
Correct.
And then they would still charge the seller like an 8 to 10% fee.
Right.
So they were really dipping into it. And I think that ban on institutional buyers is just to try to push that off to the side to where it doesn't spike the prices up even higher.
Sense. That does make sense. In addition to it, if anything, it allows less competition when that frenzy begins.
Yeah.
It's pretty smart. I didn't think about that concept because you're right. If rates are coming down, but then at the same time, you think about it, they're not using investment funds to buy they're using cash.
Yeah.
They're buying them. They don't care about the rates. And that is also why you're seeing.
But they don't care about the rates. But what they do care about is the demand on reselling it.
Okay.
So the rates come down. The general public creates the demand. They could buy it at a discount and sell it for even higher.
That makes sense.
And then you buy it and you hold on to it. So during COVID, I've had multiple people that bought a house and sold it a year later for $50,000 to $100,000 more.
Mm-hmm.
So think about Open Door, these companies, they come buy it, they hold on to it for a few months and then just throw it back up on the market and they catch that
up.
rise.
Yeah. And let me tell you guys, what we went through in 2020, 2021, 2022, up until that point, that was not normal. You don't buy a house as your primary residence and are able to sell it a year later for 50, 100 grand more than what you got it for. That's just totally abnormal.
And it'll probably never happen again.
Probably will not. Hopefully will never happen again, because if it does, that means that we had some type of pandemic, something that shut us down, and the people holding control of the button fell asleep. They left it on too long, so to speak.
The economy is tough right now.
Absolutely.
I tell my wife every time we go to a restaurant, and we don't go too often, but go to Chama.
Okay.
2 years ago, you made your reservation and you still probably waited 20 or 30 minutes before you got sat down.
True.
Now you don't need you walk in and you get sat down.
Yeah. Yeah. Well, I think people this is just my perspective. I think people are getting tired of shitty service for having to pay so much.
For sure.
That's a broad statement, of course, but I feel as though a lot of these restaurants feel like they can get away with doing that because they have.
Yeah.
You know what I mean? But then at the same time, is that the same what we're getting in our real estate world today from the new to the business agents or the TikTok agent that really don't have the experience to be able to advise their customers? They're just going through the motions.
I'm sure it does. Yeah.
You know what I mean?
And the successful agents are marketing first.
Yeah.
Real estate second.
Absolutely. That's true. Brad, you got anything else to add to this, man? I would give you this last piece of the segment to talk about anything you want to talk about, brother.
I think everybody just needs to buy more houses.
Buy more houses. Okay.
It's simple. And especially if one thing, just going back to the accelerated depreciation.
Okay.
So I don't know about mortgage lenders, but I do know because your wife's an agent.
Yeah.
Right. I'm an agent. If you're a real estate agent, you're considered a real estate professional.
Mm-hmm.
And that's one of the caveats to be able to use accelerated depreciation.
That's true.
So same thing if you have a client or somebody that buys an Airbnb and they self-manage,
right?
They become a real estate professional and they're able to take advantage of the depreciation.
Yes.
And depreciation, we talked about not claiming taxes and not being able to qualify.
Right.
As a lender, depreciation you can add back on.
Absolutely.
And you don't lose that money on being able to buy something.
That's exactly correct.
So just
So what Brad's talking about here is on the lending side, we have to take your bottom line income on the tax returns, meaning I paid taxes on this portion. Now, you'll find depreciation on a Schedule C as a self-employed borrower. You'll find depreciation on a corporation, LLCs. You also find depreciation on assets like a property. If you have them as an investment property, whether it's held under an LLC, hopefully it's paid off if you're doing that, or in your personal Schedule E, you're going to find depreciation. We, as the lender, have to take the bottom line, but then we get to add back things like your mileage and your depreciation. In many cases, there are ways to do a long-term depreciation where you're getting a little bit each year, or you can stack that bad boy up. Therefore, it's actually giving you a positive income flow on taxes and how we perceive them. So just food for thought, and it's a great point for sure. Most definitely. Well, Brad, this has been pretty good catching up with you, dude.
Yeah, for sure. It was fun.
Absolutely. If you ever have a topic, you let me know. We'll get you back on here. Do you want to say anything about your podcast?
Yeah, so check out, it's called All Things San Antonio. We just focus on people doing cool stuff in San Antonio. We don't talk too much about real estate.
Okay.
So real big, we brought on a bunch of people that were involved with Project Marvel.
Love.
We had some mayoral candidates come on.
Wow.
And just people doing cool stuff in San Antonio, restaurant owners, business people, anybody that's doing something cool, we bring on.
That's awesome. And I'll flash it right here on the screen. One more time, it's called
All Things San Antonio.
All Things San Antonio. That's pretty good. Well, Brad, thank you for joining me for this conversation. Thank you for being honest and transparent. I'm sure there's plenty that folks can take from this discussion and apply to their everyday life, hopefully in what you're doing so that you can continue to be successful in 2026. Let's see, what else do I got, man? Next week, tune in for John Hudson and myself. We may have another guest or not discussing these two topics right here about the $200 billion that Fannie and Freddie are going to be buying. We've got some pretty hot takes, both good and bad and indifferent, and the announcement of these halting investment property purchases. But I want to thank you guys for continuing to follow and like and subscribe. Amy, if you can throw this up on the screen. We are up to 37.5 solid subscribers. Guys, we are continuing to grow. We finally hit over 1 million views. It took us several years, but then again, who really thinks mortgage and real estate is sexy? I do.
Mortgage and real estate.
You know what I mean? Exactly. So I appreciate you guys continuing to like, subscribe, view, share, all that jazz, but we will catch you on the next one.
Look at yourself in the mirror and ask, did I get better today? Monday, get better. Tuesday, get better. Wednesday, get better. If you do that for 5 years, 10 years, 15 years, how much better will you be? Are you getting better every single day? That's the real question. And it all comes down to taking small steps. You don't have to accomplish everything in one day or even 1 week. Just focus on getting a little better every single day.